Well, we're back with you, keeping a close eye on your markets, and I am joined now by Todd Bubba Horowitz of BubbaTrading.com in Chicago. Todd, as we look at the trade, I see where things are softening up a bit from where they were maybe 45 minutes ago or so, and let's take a look at our quotes and get an idea of what I'm talking about here. We'll start with the corn, and with our quotes provided by Bar Chart, we are higher. We are higher by 3 cents at 5.56 on that December contract. Now, that's after a high overnight of 5.61 3/4, so we're off of that by a little over a nickel now. And on the soybean trade, now soybeans, you had another bullish factor this morning as USDA said we sold 132,000 tons of them to China again. That's, I believe, 5 days in a row of sales. But they are coming off their highs. November soybeans now at 13.44 1/4. That's 7.5 higher. But that's 11 cents. 11 cents off our earlier high of the overnight and early morning trade. So keep that in mind. It is higher, but not near where it had been. Now, in Chicago wheat, you currently have September just 1/4 cent lower, December down 3/4 at 7.38 3/4. In Kansas City wheat, we have September currently trading at 7.09 3/4. That's down 4.5 cents. And December also trading 4.5 lower right now. And let's move on to our spring wheat trade. In Minneapolis, we have September down 7.5 and December down 7.5. It's at 8.94 3/4. So again, they seem to be kind of punishing the spring wheat compared to the other two exchanges. Let's ask Todd about that. Todd, is this just related to trying to narrow up that spread again after it widened out so much recently, or what's that about?
You know, Maron, I think this is all about what may or may not come out tomorrow as far as what the numbers are going to be. You know, remember, we are in such a quiet period of markets in general that they have a tendency to whip around a little bit more than they might under normal circumstances. So it appears to me you're trying to see some positioning ahead of the numbers, and you get a movement that's a little bit wider in both directions because of the lack of real volume, because the real participants aren't really doing anything right now. In fact, many participants are out of the office for the month, basically, especially in Europe and the big traders in the States. So you're getting much more movement on much lesser volume, which can create bigger highs and bigger lows than we would ever expect.
You know, I've heard that comment before where the month of August, when it comes to ag trade in the grains, is almost like being in a blender. Everything just gets chopped around and goes kind of sideways, but it's hard to get anything with a long position in it or a long-standing position. Todd, tomorrow, do you think the market will change course after that report comes out or just continue to chop around?
I think it'll continue to chart, Marlon. I mean, unless this report is unbelievably bullish or unbelievably bearish, I would expect the same type of action we've been watching, which is slightly negative to the market, but not negative enough to make it a concern. And I think once we get out of the summer doldrums, I think the markets will start to work their way much higher. I still believe that we've got a big third, fourth quarter coming. But, you know, you have to get through this month of August, and with the one report, which could be bullish or bearish, and, you know, more than that's expected, that could create some action because you could break some technicals down in either direction if the number is way out of whack because of the light volume. So suddenly you violate technicals on a chart, and it changes some of the dynamics.
So put Todd in the bull category after the report. Thanks, Todd. I appreciate the time. Todd Bubba Horowitz of BubbaTrading.com in Chicago. We'll come back and talk livestock after this.